Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the 17th of October, Thursday, the 17th of October, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. We're going to go for our usual regular run through in here today. Take a look at the calendar, what we've had, what we've got coming up. Take a look at the articles from the major news wires. What are those macroeconomic, fundamental, geopolitical events that are shaping financial markets right here, right now? And then we'll also take a look at the charts, take a look at where the trigger points are, where the potential movements are going to come from today. I'm going to start off with the calendar in here. Obviously, on the back of yesterday, which I'm sure Duncan ran through with you, we had that very positive, I guess, really, CPI data from the UK, which showed very much UK inflation under control, way below 1.7%, way below the Bank of England's target of 2%. And, heightened risk now that we're going to get rate cuts going forward from the Bank of England, but also some concerns about slowdown. If you look at the data you got in front of you here today, similar data from the ECB today. So the core number coming in line with expectations at 2.7%, and also the month on month. But you'll see the actual headline number in here below expectations. So previously 2.2, expected at 1.8, coming at 1.7 as well for the Eurozone as a whole. So cooling across the board in here. Very much now focused on the ECB meeting that we have today. Got a couple of articles on that. But it's pretty much nailed on. You can see in here interest rate decision. We get that in 43 minutes time from now. Expected for another 25. That'll be a back-to-back 25 basis point cut from the ECB, the European Central Bank. So we're expecting that later today. That's already priced in. Obviously watching out for a bit later after that, the press conference at 8:45 Eastern. Watching out for that as well to see if they're even turning more dovish, given we've got this cooling CPI data and the Eurozone economy looking far more negative potential, not necessarily going into recession, but much closer to a potential hard landing than we're seeing, say, from the US and to a lesser extent to the UK. So that's important, right? I know you guys are trading the US markets, but it's a global world. They're global markets. And if we get any kind of hint that the ECB is shifting more dovish, given that we're seeing a shift in expectations for the Bank of England to be more dovish as well, that has knock-on effects to potentially, so it certainly has knock-on effects into the currencies, but more importantly, potentially, it's showing that inflation is coming more and more under control, and that gives opportunity for central banks to be more dovish, and also opens the risk that the Fed could become more dovish going forward, if the other central banks are moving their way. So we were certainly watching for those two events. On the US side, front and center, we've got the core retail sales data coming up today, and the Philly Fed manufacturing index. So we'll be watching all of those retail sales, core to retail sales, and Philly Fed, all of those coming in just under the hour. Okay, so just under an hour we have those. They're the main focus in here going into the main session for the US going into the day. I don't think we've got any Fed speakers that I've seen. Lagarde is speaking. Obviously, that's after the press conference. I don't think anything else I can see at the moment there from the Fed speakers. On the earnings side, yesterday we had a really strong numbers coming in from Morgan Stanley, saw their stock price leap. Abbott Labs also doing well, just reverting back to yesterday, but moving into the day, we've already had some positives. Blackstone in here beating expectations, but all eyes today now on after the bell this evening, we have Netflix. Netflix is important, as one of the FANG stocks, as one of the Magnificent Seven stocks, but also important in here on the Netflix side, because the Netflix is seen as a gauge of the US consumer and the global consumer. So how is the US and global consumer bearing up, considering there are concerns that we could be going for a slowdown, with markets, obviously interest rates having been significantly high. Some of the data pointing towards slowdown. Is the US consumer, is the global consumer still healthy? Is it still up for demanding Netflix? So that's going to be, so it's not just the headline numbers of EPS and revenue that we're looking for, but also the growth of new users as well is always a critical piece of data that we look for from Netflix. That's after the bell. Overnight in here, we've also had TSMC. So TSMC is the Taiwan Semiconductor Manufacturing Company, as having had some negatives more recently. The negatives from ASML Holdings yesterday lowered their 2025 guidance. We saw their stock price significantly hit and pulled down the chip and semiconductor sector yesterday. But going into today so far overnight, we've had Taiwan Semiconductor Manufacturing posting positive results in here, and that's boosted obviously the semiconductor stock. It's boosted TSMC. It's boosted the semiconductor stocks and sector. It's also boosted the bigger tech indices. So the Nasdaq's notably higher in here already in the futures on the overnight. So and TSMC the main driver of that. And there's a few headlines on that. Morning bid here from Reuters. TSMC steadies chip ship. ECB set to ease, very much nailed on that the ECB are going to deliver a rate cut. Futures rise, chip stocks rally after TMC results. Economic data in focus. That economic data being the retail sales data that we've got coming up today in just under the hour. European central banks are seen cutting interest rates today, and more from Reuters. ECB set for second straight rate cut as Eurozone economy owls. Gold continues to push higher. This is despite the strength of the dollar. Remember, there's an inverse relationship between gold and the dollar. Okay, so recent dollar strength has not seen gold go lower. Gold has held its place because it's also a reflection of concerns around inflation. Okay, so gold and also risk aversion because of the concerns regarding the situation in the Middle East. So situation in the Middle East plus inflation fears are seeing gold pushing higher and keeping its bid despite the dollar maintaining its positive tone in here. So dollar has been very strong over the last few weeks in here, as we've seen in anticipation of a less dovish Fed. Remember, we were pricing in 75 basis points worth of cuts going into the end of the year. Now we're only pricing in 50 basis points of cut. So we're looking for a less dovish Fed, which then strengthens the dollar. And also now we're looking for a more dovish ECB, a more dovish Bank of England. So we're kind of seeing a slight divergence in those central banks, which then means dollar strengthens, euro and the pound weaken. So the dollar's been strong, but nevertheless, gold has not gone low. So it's particularly significant that gold is obviously priced in dollars. So normally when the dollar is strong, the gold price goes lower. But gold has held itself in a strong position in here. The upper end of range is up near the record and all-time highs, and that's because of concerns both of inflation and because of due to risk aversion due to the situation in the Middle East. European stocks gain, euro weakens, energy, Trump trade lifts dollar. So saying that the dollar continues to stay strong in here, and so all positives there. What else do I have for you? The overnights, Asian stocks actually lower. The Hang Seng down 0.7%, and the Nikkei down 0.7, and the Hang Seng down just over 1%. But European exchanges, with that anticipation of a more dovish tone and rate cuts from the ECB, and plus what's going on with TSMC has boosted European bourses this morning, with the UK FTSE up 0.4, the German DAX up 0.8, and the French CAC up over 1%, nearly 1.25% this morning. And US futures also higher in here on the overnights, nearly 0.8 up on the Nasdaq, with that those TMC numbers. And the S&P also up 0.4. Turning to the Fed Watch tool, this is kind of creeping higher in here, pretty much nailing on there a 25 basis point cut with 92% chance there of a 25 basis point cut at the next meeting in about 3 weeks' time, and the 7th of November. And then going into year end, 18th of December, pretty much pricing in now 84% chance that we get a second rate cut. So 2 rate cuts anticipated going into the end of the year. Bond markets have gone more into a consolidation phase, so having pushed up to higher yields, lower prices, higher yields in here with the shift and the anticipation of a less dovish Fed over the last few weeks in here through early October. We had a slight dip lower in yields in here just recently. So, we're certainly seeing that. What else have I seen here? So bond markets as well in here on the futures side. So up higher in price, lower in yields. But the underlying bias is still for lower prices, higher yields on that side. But equities in here, despite the setback we saw in here over the last 24, 48 hours, driven by those negative outlook from ASML, obviously buoyed back higher in here on the overnights, and we saw a slight rebound yesterday, particularly in the S&P towards the end of the session, and then higher again on the overnight. So you can see in the Nasdaq a big impulsive bar today, having been slightly indecisive yesterday and sold off the prior session after the the ASML numbers up with TSMC no, and aiming back. I think there is risk today, depending on how the market reacts to the ECB, depending on the market, what the retail sales data is, and then obviously you've got Netflix after the bell. We could be easily back up to and maybe through the highs in here, looking positive going into this morning. On the ES, we're actually rejected all of the losses. We're back up at the highs, just sitting just below the highs from the end of last week, beginning of this week actually. The highs posted at the beginning of this week, despite the sell-off that we saw on Tuesday. Markets already back up, got half of it back yesterday and already on the overnight, the other half back. So sitting right on those highs, and all the risk is for extension. That obviously depends on the data. That depends on the ECB delivering the 0.25% rate cut. That depends on whether we get a more dovish tone, that we could see extension with that from the ECB. That could help out US stock indices. If we get a positive retail sales number, that's going to help as well. And then obviously looking at Netflix as well. So lots to look at today. Keep an eye on all of that, particularly after the bell. There's probably going to be some opportunities there when we get the Netflix numbers. I'm going to wish you all a great trading day. Take care, stay safe. And Duncan will be back with you tomorrow for Friday's end of week Bull versus Bear webinar. Bye.